Good morning, Predicted Trades family. Make sure my mic is on. Yeah, mic is on. Hopefully you guys can hear me, see my screen. All right. So we'll do a quick review of yesterday. It was a slow grind down. Took all morning to get near a low. And we had our signs pretty early with rejection of VWAP, repeatedly. And we were down at our burger bottom for ES. So all of these signs should tell us to go short, to not play calls right now, because we are getting rejected at VWAP and at our burger bottom. This can lead us down to our outer shaded region, and that's what we got. And if we kind of go back to think about prep yesterday, we were in a bunch of tight squeezes, and I said, should we start to give out certain key things like this 39.41? You can see we fell to it and then tried to bounce back to VWAP repeatedly. So I talked about if we gave out that 39.41 Friday's low, we could go down to see the daily 8 and daily 50. So that thesis from yesterday's prep unfolded pretty much perfectly. We also had a thesis to the upside, right? But when we start getting these signs, we need to recognize them and play with the trend, right? But it was a slow grind. I mean, I only hit puts at certain points. I did not touch them for about the first hour or two. And then on this bounce to try to get back to VWAP when we got above Friday's low and then gave it out, that's when I did pick up a little bit of put action just to get down to the daily 8 and 50. Didn't obviously capture the whole move and didn't even necessarily catch from this top to the bottom. I kind of scalped around, so picked some up here, locked, let it bounce, picked up a little more, locked, that kind of thing. It was definitely a tough day. Depending on what you were looking at, things weren't moving a lot, you know. SPY and Q puts, even if you got them right at open, this whole drop, they kind of provided a double, not even all of them. You know, I think I saw some SPY puts that, you know, you would have gotten for maybe a buck. They or a $1.50, and they hit like 260 at the lows. And on some Q puts, you had to pay about $2 right at open, and they hit about 360 at the lows. So, you know, it took a long time of holding and them not really moving to get a good piece. And in a lot of cases, they weren't even doubles because, you know, we were playing Wednesday's expirations on a Tuesday. But even SPX wasn't moving that good. The 3900 put, which would be down at the extent of this outer shaded region, it actually kept losing value from about 10 to 11. Even though we were dropping, it wasn't really gaining value. And every pop, they'd rip it right back out. It wasn't until about that 11 to 12 dump that those printed about a 1 to 3, 1 to 4 on the 3900s. I switched up to the 3910s just to get something a little closer, and that was moving a little better. But long story short, definitely it was a tough day. I only took a couple of scalps on the 3910 here and here. So, and I think I might have tried it a little bit later in the day, and it gave about a 60-cent move before this pop. So again, you know, I maybe call that one trade that I took yesterday because I hit the same strike, just catching a couple of waves, right? They were, you know, like probably 2 or 3 trades, but I kind of call that just one, watching one strike and hitting the same kind of dump. So, you know, definitely a tough day. And what I was trying to preach yesterday is I might not take a trade all day just for how slow and choppy this grind down was. And I only, you know, ended up taking like that one strike a couple of times. So just I recap this because we do need to try to be picky with what we choose to trade. And it was a messy morning, so I didn't trade anything. Calls weren't really moving as we were going down. Some names were going up as the market was going down. So individual names are maybe a little easier, but all in all, when we have a tough day, and we knew it would be a tough day because we had all those squeezes stacked up. Let me, come on, respond. Let me load up our normal set so we can see all those squeezes again. This is what we had pre-market going into the day. So I kind of told myself, hey, if it's going to be difficult and choppy, you don't have to trade. And so I didn't trade for a good amount of the day. And then when I did, it was quick. In and out, done. So definitely something I wanted to cover and recap that, you know, cash can sometimes be the best position to be in, especially if things are looking ugly. And frankly, until about this drop from 11 to noon, you know, I every option I was looking at was stuck in about a 50-cent range. Like those Qs that went 2 to 360. They went from 2 to 2.5, back to 2 to 2.5. Like all of these strikes were just stuck in a range until that drop finally happened around that 11 to noon. So just wanted to recap that to say, you know, when we have a bunch of stacked stuff, it can be a tough struggle, even in a drop like this. If you go and look at those contracts, they weren't really moving that well. So, I did not take very many trades. Coming into today, I'll wrap up that recap. Let's take a quick look at our economic calendar. I know we've already covered it this week, but going to cover it again. Just in case you folks missed prep. If you ever do miss prep, I definitely recommend going back and rewatching it. Even if you didn't trade, definitely worth seeing what the thesis was for each name and then how it unfolded. So, today, the big day we've all been waiting for. We have FOMC, a Fed day. We've got a little bit of economic data that'll be coming out in about 20 minutes. Might hold a little impact. But ultimately, everyone's going to be waiting for this FOMC at 2 o'clock. You know, we'll get that release at 2 o'clock, and we do have Powell speaking at 2:30. We don't always have Powell speaking after FOMC, so we'll see. He'll likely just reiterate whatever they release at 2. And we'll see what the reaction is. I would say as long as they don't do any kind of crazy rate hikes, it'll be priced in and expected. We do also have on Thursday our jobless claims and some GDP, and then on Friday some PCE inflation and that personal income and spending, and then the University of Michigan reports. So, Another thing worth covering, hopefully everyone's already up to speed on this, but if not, we are in a pretty busy earnings week. We had Microsoft and Microsoft and Google after the bell yesterday, also Chipotle. They all went up, even though Microsoft and Google were a miss. They went up. So, interesting reactions all around. Today we do have Shopify, Boeing, Spotify all before the bell. And then after the bell we have Meta, Qualcomm, Etsy, Lam Research. So a couple of chips. Tomorrow we have yet even more coming. MasterCard, some planes and healthcare, and then Amazon, Roku, Intel after the bell, and some energy on Friday. So definitely a big week of earnings that is impacting our price action. And in our earnings channel, you can come in and check out some of these posts from Earning Whispers about each name that reported earnings. So, let's dig into what we could see today. We did open up and fire all of the stack squeeze crap that we had yesterday. Now we're just back to a simple 30-minute. That's kind of right around our zone here that we've arrived back to. You know, if you remember from prep yesterday and the day before, we're holding this zone, popping up, popping down. When we were holding this zone yesterday, I said, you know, should we give out these lows from the previous day? It's a pretty clear target right back to these first set of moving averages. We hit that, pretty much made a W, and then moved back out. So now we are back up to our zone, which is like, frankly, when I woke up this morning, I didn't even look immediately, where are we? Because I had a pretty darn good feeling we'd just be in this zone. And then when I finally looked, it's like, oh yeah, right back to that zone. When we give out, you can expect us to go to the next key target. When we hold, you can expect us to get right back to it. So let's see if we chop around this zone for a second this morning. We'll have our 30-minute squeeze to help give us some guidance. If we can start to get above that 39.61, push through this 30-minute squeeze and fire it up. You know, next targets are getting back to Monday's high and pre-market high at this first Keltner up, right at about 39.80, and then if we can clear that, it's a pretty clear target to 4,000 again. If we chop around this zone and start to lose that 39.53, we are likely going back to test that Friday low, 39.41, and now our daily 8 has stepped up right below that. So if we do see a little dip and profit taking to fill the gap a little bit, hoping, or I'm, expecting us to hold up here. If not, we do have that squeeze bottom right below at that 39.30, and we still have our daily 50 down at 39.20. So if we start to lose that 39.53, we got targets to the downside. We start to break through that 61. We got a couple of targets to the upside on ES. And yes, as Papa just helped kind of point out, if you are tuned into prep, we would appreciate those likes and subscribes and whatnots. It definitely does help us on the whole YouTube front. On NQ yesterday, the clear thesis was if we lose the daily 8 right down to this key level, daily 15 and 21 straddling that key level, you can see that's what we got, and then right back up. So let's see if the daily 8 can hold us up this 30-minute squeeze bottom, and if we can break through this trend line from the highs of the last few days. Once we break through that trend line and fire this 30-minute squeeze to the upside, you know, got to take out yesterday's highs pre-market, which is look like we already hit today pre-market, and then a fight back through Monday's high and pre-market high to try to get back to this 458. Overall goal, trying to get to that 12,500 for a test. And we have that daily squeeze up there at 12,600. If we start to lose that daily 8 and fire this 30-minute squeeze down to fill the gap, you already know what I'm going to say, right back to these moving averages. So, let's see if this 30-minute squeeze and the daily 8 can provide the support to get us through that trend line. Ruddy stayed in most of its squeezes yesterday. Did a great job of holding that 1800. Did not even need to tap its daily 8. And we head higher. So let's see if the Ruddy can try to push through some of these squeezes, get through Monday's highs, which is not too far from, and start to recover some of Friday. Could be an early indicator for, you know, if we are going to try to break through Monday's highs, since we're very close to it. And, you know, obviously if we're rejecting, back down to squeeze bottoms and looking to hold that 1800, and the daily 8 has now stepped up above 1800. So if we do see some profit taking and a dip, looking for that to hold. YM. The YM yesterday pretty much contained in all those squeezes, right back up near yesterday's highs. Need to take those out and get to this 32,000. It's a very big key level, psychological number. You can see on Monday, it's just the resistance we could not get through. So that's going to be a key number today. Once we get through that to the upside, things can really start to light up on the market. And we could make that push back to 4,000. If we do see a dip, basically looking to hold that 31,800. We held it all morning. And then once it finally gave out, we saw a decent drop. But you can see it very quickly got back to recovering that. Lost it again. So just like 32,000 is a very key resistance right now, that 31,800 should try to act as good support if we do see a dip to that 30-minute squeeze bottom. And it doesn't look like the YM tagged the daily 8. So should that 800 give out and we fall into these larger time frame squeeze bottoms, we might just get a tap of that daily 8. Apple. While we're waiting for that to load, one thing I will point out, over on our 4-hour ES that we kind of keep an eye on every day, I've got, you know, my 3 moving averages, the 8, 21, and 45. You can see that in these last few days of going down, and yesterday's bottom was right at that 45. We held and got a bounce, and now we're back above the 8 and the 21. So for all, normal purposes, this was a bullish move, a bullish set of moving averages. And we've just come back and held the 45 and caught a bounce. So in a way, this is measured profit taking, a bounce at a key moving average on the 4-hour, and continuation. So let's see if we can get that continuation and keep on trucking up for new highs this week. Not trying to get too excited or giddy. We could always come back and test them and fail and give out. We know where we're going if we do, but overall trend brought us back down to hold that trend and bounce through. As you can see on a 4-hour, we're already kind of through our resistance. So, things are looking good this morning. On Apple, always want to keep an eye on wicks like this. They can be sometimes precursors or warnings, let's say, that we are going to visit that wick. They can also be instances where a move is started and they got a dark pool print right back where that move started to keep going. But definitely want to keep an eye on these wicks, this downtrend, to see if Apple's going to come back to test these squeeze bottoms and that daily 8 and daily Keltner. You can see it slipped it yesterday, but then it held it pretty well into close to push off of it. So let's see if Apple can find its feet. Maybe at this 152. I say that because you can see we were bouncing at it repeatedly before yesterday. Now we're back above it. Let's see if we can hold that 152. If that gives out, probably going to complete the journey to this wick and squeeze bottoms. But if 152 can hold us, start to send us back through pre-market high, squeeze tops, we've got our zone above, and both of our squeeze tops pretty much right at those key levels. AMD. AMD rejected that squeeze top key level, so we go back to levels below. Let's see, made it to the daily 8, did not quite make it to the daily 21, and held that 85. I feel like the last 2 days I've said, I might have skipped AMD yesterday, but I remember saying if we lose this key level, it could go right back to 85. We got that 2 days in a row. So looking for that 86 to hold. If it doesn't, going back to that 85 and that daily 8 for one more test. If 86 can hold and get us through this trend line from highs yesterday and pre-market, back to that key level above, with a goal to get back to that daily 50 at the next key level / zone around 90. Amazon, you can see the nice uptrend, and when we break trend line, we should be ready to change direction. Made it back to the daily 21 and 15. Did a pretty darn good job holding it yesterday. Obviously slipped it a little, but right back up above it after hours. Looks like we're on a good trajectory to be opening right near that. So let's see if Amazon can hold the daily 15, daily 21, get through trend line from yesterday's high and today's pre-market highs in a bid to get back to that daily 8 above. We can fire these squeezes up, get north of 120 and start to come back. But Amazon does report tomorrow after the bell, so could easily just bounce around this daily 8 and daily 21 and this squeeze for the next day or so. We'll have to see how that FOMC reaction goes. But you can see we're back at the daily 8, 21, and 50 below. So we could easily just bounce around those and this squeeze. BA, did you report? Ooh. So BA been on a very strong move up. Almost got to third Keltner recently, or on last Friday. And as you can see, when it breaks trend line and the profit taking picks up, we always go back to something key like a moving average. Daily Keltner held those nicely into earnings report. Let's see, what did we get? They estimated a negative 70 cents. Looks like it was only negative 3 cents, so good reaction. Already taken off above that 160 and already set a high above Friday's. So let's see if they continue to rotate into BA today. We might get one of those slow fades back to fill the gap before moving higher. But all in all, it's good for upside in the market that we had a good reaction. Still looking for BA to hold that squeeze bottom if it does do a little fade back, and this trend line. As long as we stay above all that, good sign for the upside in the market in BA. CAT made it back to the daily 21. Do they report next week? Okay. So CAT reports next week. Not a ton of interest here. We'll likely chop around the 8 and the 21 into earnings next week. But as long as earnings go well, could set up an interesting recovery on CAT. That third Keltner right up near 200. And as we've talked about in the past, that 200 is very key, and the daily 50 is right up there. So not a lot interested right now, but next week CAT could wake up as long as earnings go well. Google made it to the bottom of that daily squeeze yesterday, right before earnings. Good reaction, right back up. Opening near Monday's highs. Still have Friday's price action to engulf to the upside. Well, let's see again if they do a little slow fade back before picking it up, or if we just continue up to the daily 21, daily 50, all stacked around that 112. And if we can get through that, it's that next Keltner up, right back at recent highs in that 115. GS. Come on. Not a lot of interest here in GS. Made a nice move. Now just kind of going sideways the last couple of days. But it's maybe worth noting that in the last few days of profit taking, GS has pretty much stayed up here near the highs. So let's see if we have a good reaction on FOMC today. You know, this could make a nice move from this 317, 320 up to squeeze tops around 330. I'm skipping JPM. Meta reports today after the bell, sorry. Loading time is taking longer now. So not a lot of interest in Meta today. They report after the bell. So let's see how that goes. But we could see a nice response back, just like we did on Google. Although, you know, Meta's been getting beat up lately. So, not one of my top picks. Let's see if 160 can hold. If it can't, we do have that daily squeeze bottom down at the next Keltner. If 160 can hold, we do have moving averages above. If we have a good reaction, likely going to magnet back to those moving averages above. Microsoft reported And just like I said on Facebook, if it's a good reaction, straight up to moving averages like a magnet. We can see that's what happened on Microsoft, and it, in all of its wonkiness, cleared from the bottom of a 2-day squeeze and daily squeeze right up to the top in a 30-point swing, clearing Friday's high. Obviously coming back to earth now. Let's see if we can hold these moving averages. You know, I expect kind of that first half of the day where it just sits at moving averages. And then starts to get picked up for more. Definitely want to see it hold these lows from Monday at about 256 and this daily 8 at 257. That should be a good support zone. If that gives out, we might see a little stronger profit taking. Back to that 255-ish. But as long as those can hold for the rest of the week, we could see ourselves get back up to this wick and that 270 and that daily squeeze top. Netflix. Netflix made it to the bottom of a 4-hour squeeze. Let's see if it wants to go back and fill the gap for a quick tap of 214 and that squeeze again. Or if it can just keep on trucking through this 30-minute squeeze top. If it can get through yesterday's high and around 220, could make a nice move up to 4-hour squeeze top. NVIDIA. A nice settle from that second Keltner up. Nice slip back and settling at the daily 21, 50, daily 8, all stacked together. Nice bounce. So on the video, let's see if we can hold the daily 8 and 21, right at about that 168. If that gives out, going back to yesterday's low and these squeeze bottoms, daily 21 around 164. But if that 168 can hold, get us through pre-market high, we can truck up to that 174, maybe as high as that 180. QQQ. Slip back to the daily 21, back above. That wick came right back down, so definitely want to watch that wick on Qs, just like on Apple. But let's see if we could hold the daily 8, which will likely be kind of around this 297. If we can hold and start to get through a squeeze top in this psychological 300, could make a nice move back up. If we start to give out that 297, we're probably going to see this wick and this squeeze bottom. And should those give out, you know, daily 21, daily 50. Next Keltner's way down there, so let's see what we get. I'm going to skip over some of these. Let's get to SPX. SPX, we do have a small gap down from yesterday. Near that 3960, which is also POC on ES, at around 3954, 3960. We are pretty close to that pre-market right now, so SPX could be opening up near this gap fill. We could see a little rejection and dip back to our zone. at an attempt to fill that our gap up. But if we can get going through this gap fill, it could accelerate us right on up to that 4,000, which is the top of the daily squeeze. And again, the top of this gap that we, almost filled is up at about 18, 40, 20. If we can really get going to the upside today. But should this zone start to give out that daily 8 and 50 that we held yesterday, then we will drop to the 21 and 15 down at this last gap fill zone, which was technically filled, and normally I'd get rid of it, but I've just left it now that the moving averages have pulled up to it, just to help mark it as a target, right? So let's see if our key levels zone moving averages can hold us, should we start to come back to fill the gap, or if we just keep on trucking. SPY. SPY, made it back to that daily 8 and 50. Nice W back up. Let's see if we can hold that pre-market low and that 30-minute squeeze bottom. Should those start to give out, we could come back to fill the gap and test this 2-hour, 4-hour squeeze bottom again. At that 392. But if we can hold our pre-market low here and that 30-minute squeeze bottom, definitely looking forward to get up to this 395.8 key level above. And if we can get through that and turn it into support, looking to get through this 2-hour and fire that up into this 4-hour back at 398. That daily still up at about that 399, 400. We'll have to see how FOMC goes. Tesla. So Tesla, gave out that 787, 786 that I was calling out early in the day. Said if it can hold there and the market can bounce, we can move back up. Market kept going, so we ultimately gave out this level. And just like I talked about in prep, should that level get about, we'll probably get right down to that daily 8. Did that, held. Now we're back above that level and in a little wedge. And that 286, 287 kind of cuts the wedge right in half. So if we can hold that 286, 287 and get through this wedge top, we can start to make that journey back above 800 and start taking out some of these levels above in a bid to try to get back to that 850. But if we can't hold that 786, 787, we can slip right back down about to 777 and 770, where that daily 8 will be sitting. Should that give out, back down to the 21 and 15. Finally, a VIX. So yesterday on VIX, we talked about if we're going to get more downside, we'll get up above these daily 200 and daily 8 and push off of them to get back to 25 and the daily 15. That's exactly what we got. So that's why we got some downside, right? We talked about if we're going to see some upside, we should reject these moving averages, this 24.5. Start to get below them in a bid to get back to 23.3, 23.5. So going to be similar today. If our gap up in the market is going to have continuation to the upside, we need to see VIX reject 24.5, get back below the daily 8 and daily 200, and push down through 24 in an effort to get back to 23.5, 23.3. But we should definitely keep an eye out, since we did get above 25 yesterday a little bit, right? If we hold these moving averages, get back over 24.5 and back over 25, 2 instances over 25, and we could start to see a breakdown in the market, right? So 25 is very key, at least for upside. I'm glad that we rejected and closed below it. Now with this gap down, let's see if we can stay below that 25. That daily 15 has now stepped below 25, so even if we get up to test that again, we can stay below 25. Ultimately, we need to get back below this daily 8 and the 200 and back below 24 for some good upside in the market. We did tag the top of this 4-hour squeeze yesterday, so let's see if we're going to get that reversal. And that's pretty much it. Hopefully this was helpful for everybody. Thank you for tuning in. We'll do one quick check-in on ES, since we did have some economic data drop around 8:30. Looks like it didn't have much of an effect. And we continue to hold our zone. So let's see how we deal with these key levels in that 30-minute squeeze. Let that be the guide for if that 30-minute squeeze can fire to the upside or downside. It will fire to the downside if we intend to go back and fill the gap. So good luck today. Thanks for tuning in, folks. And we'll see you in the room.